Unfortunately, I am told that the BIHL results presentation was moved from 8:30 to 10 o'clock this morning.
Oh, you're kidding.
Yeah, so I guess it will affect a number of.
We're clashing.
Yeah, we're clashing with them.
Morning.
And we moved from last week, so I guess you could say they were there first.
Well, they were supposed to be at 8:30 this morning.
Oh, I see. They were earlier. Yeah. Okay.
Charlie, can I ask you to mute yourself so that we don't hear?
I see it's 1 minute past 10, so should we wait a little bit longer, or would you prefer us to get going? See, we have 37 people on the call.
In the past, we've given always 3 or 4 minutes, 5 minutes. So I would maybe Lucy can talk about the protocols as in three. Are you going to?
I'm going to take that. Yeah.
Okay.
Welcome, Mr. Sussman.
Welcome. Thank you. I wasn't sure whether this was the meeting that was being delayed, so my apologies for being a little late.
Perfect. Thank you. I'm just going to wait another minute. I'm going to get going. So a very warm welcome to each and every one of you. Thank you very much for joining us for the RDC year-end results presentation for the financial year ending 31 December 2024. It's a great pleasure and privilege for me to, on behalf of the RDC board and company, to welcome you. Today, the agenda is going to be dealt with by a number of speakers. We'll be looking at the environment, social and governance committee work, financial results, portfolio analysis, as well as some forward-looking aspects in terms of prospects and developments in the pipeline. And then we'll finish off with some questions and answers. Each of these topics are going to be dealt with by different team members from RDC, and I'm now going to hand over to Guido, a man who needs no introduction in this environment, and he's going to take you through the strategy of what we're trying to achieve and the progress that RDC has made to date. So Guido, over to you, and thanks very much.
Thank you, Andrew. Good morning, everybody. I'd like to recognize a number of directors that are taking the time to join us. Clearly, Andrew, thank you very much. I see that Sita Bilemate is there, and Nicola Milne, Simon Sussman are there. And I have the apologies of Kate Mapache and of Federica Giacchetti, who sent their apologies, could not adapt to the new change of dates. And thank you, Giorgio, for being there too. I have the pleasure of going back to what RDC is all about creating shareholders' value through a diversified portfolio, and we can see that the portfolio has maintained its presence in 7 countries, and it has consolidated its disposal of non-strategic assets. We are happy to see that, and you will see it over, that the results of the year are very good, and we are working on now implementing our strategy of diversifying the portfolio through acquisitions and new developments, acquisitions on the leisure market and some hospitality projects, and using the proceeds of some of the sales to reduce the loan to value. All of these points will be made very clearly during the presentation. And the cash flows have been positive. That has given us some leeway to increase our dividends over and to propose some increased dividends for last year. So I think we are working on the strategy, and I will then now leave it to Jacopo to actually go through the detailed strategy and the implementation of the strategy point by point.
Thank you very much. And again, a warm welcome to all of you. Thank you very much for attending. These slides represent our strategic goals that are meant to be achieved over a period of time. And you are familiar with our purpose: to grow shareholders' value by owning and managing the strategic property assets that enrich the stakeholders and the communities we serve. You will see our vision and our medium-term strategic goals, which are a reduction of the growth of the net asset value linked to the inflation of the various jurisdictions, clearly reduction of the loan-to-value. And we are aiming at improving and increasing our exposure to hard currency from a revenue point of view. And then clearly, these all together, these are all linked metrics, will increase our shareholders' distribution. If we move to the next slide, which is representing the progress so far. This slide, while it is very qualitative rather than quantitative, and you will get the details further down during the presentation, shows the main objectives summarized. We have been, as you know, past the acquisition of Tower. We had quite a high loan to value, and we were hit then by the surprised growth in interests. And from then, we have steadily improved all our metrics. Sales of non-core assets with money deployed to the reduction of the debt has given confidence to our shareholder stakeholders and our lenders. Our covenants for the lending have improved quite substantially, and this has had an immediate effect with the bankers that are closest to us, and have improved the strategic looking at optimizing our debt. You will see in the presentation that while still being true in servicing the debt within the jurisdiction, so aligning the effects to the debt, we have reduced and optimized the debt, reducing our average cost of debt. And this has been possible thanks to very significant reduction on vacancies, especially in the Gauteng area, which was the hardest hit. We are now at 8.2, which is below 10. It's not where we want to be yet, but it's a massive improvement compared to prior year. And this comes along with significant lease renewals from in Gauteng, and especially in Gauteng, but not only there, even in the Cape Town area, which is booming. We are now able to get longer leases and with a strategic approach to lease, so moving to triple net, single tenants. And this year, just to give a number out of these many qualitative remarks, we have renewed or leased 27% of the GLA, and this is a very significant feat. With the money that basically all these actions, reducing the vacancy, optimizing the debt, sales of non-core assets, have strengthened the loan-to-value, which is a metric, but has strengthened the cash flow, which is our tool. And through the strengthening of the cash flow, we have managed to embark into improving our assets. We have a number of property improvement plans for our hospitality assets, which are still on the up and are really doing and performing well. And this will position them for the foreseeable future. We have property improvement plan going on at the David Livingstone Safari Lodge, well underway. We have phase 1 completed at the Protea and all of that. So basically from this slide, what I think we should take out is that we are true to the delivery on the objective to reduce the loan to value and improve confidence in the market by improving all the metrics that you analysts and shareholders have always put forward to management. We can move to the next slide. And here is basically the market we have been operating within. Last year, there was a little bit of tension because the entire planet was going through a number of democratic elections, and there's also always tension. But the reality is that they've panned out quite positively, I would say. The new coalition government in South Africa is strengthening EU ties and has given a boost to confidence, and has been it's a new thing, but has been very well received. The same political shift has happened in Botswana and other jurisdictions in the Southern Africa. And it has been, as usual, a very peaceful transition with a focus on major infrastructure projects, which are going to be initiated in the country. The other important jurisdiction of ours is Croatia, which remains very stable. Their economic metrics are linked to leisure, tourism, and services, which have been very, very strong. So all in all, the risks that we were seeing last year have not only gone away, but also are paving a way, stable and predictable outlook in this region. Clearly, there's still attention, and that is why we have put in place our response, because the scope at the end of the day is to identify risks, shifting them where possible, or mitigating them when shift cannot happen. We are working very closely with our lenders in South Africa, in Botswana, and in South Africa, and especially Croatia, for the hedging of our debt instruments. And working closely with our lenders means that we can enter contracts that will allow us to improve where the interest rates to come down while still being protected at a very low premium, where we to witness a flare in interest rates. And the rest of the strategy are now being deployed because COVID is definitely in the rear mirror. So we have changed our strategy on the lease. There's less concessions, and lease are index-based to inflation. And this really allows us to have a predictable and strengthened cash flow going forward. following on disposing of non-core asset was an enabler, and this is an exercise that will continue this year. And achieving values per square meter, which are the ones that our property actually deserves. Clearly, while you deploy your assets, there's a balance between the growth and the value, but as mentioned by by Guido before, our distribution year on year has gone up 18%. All of this by keeping in mind our ESG strategy, and you will have the details on into that one. Going a little bit forward looking, because this is the past, we details. To the next. Right. Okay. This has been a little bit of a shock for all our attendees from Botswana. Chobe Marina Lodge was gutted by fire, and while it was a shock, it was a moving experience to see the response of the community, our guests, our staff, and all the ones that had to do with the fire. We had incredibly good, sadly so, reviews on the various booking.com praising the ability and the effectiveness of our response. So we had no casualties. Immediately after that bad and sad accident, we have moved into what's going to be next. What is the new beginning for Chobe Marina Lodge? And our rebuild plans are well in progress. We will be able now to really retailer without changing the soul of that unique property, the offering to our guests. And the offering is made of two main components, in my view. The component one is the physical, one is the brick and mortar and the position and all the rest, but the rest is our staff. And so far, we are very happy to say that working closely with the unions and with the staff themselves, they have been very protected. Coming April, we will be visiting them again, and we have clearly our CEO and our GMs always very close with them, but I'll be visiting to hear firsthand what is happening and how we can support them further, as we have done so far till the end of March. Full support, which means salaries and all the other benefits that our staff had. We really believe that our staff is the differentiating factor, and that is how we operate. The insurance, we have a very strong insurance. We have both PI, being business interruption, so a cover for loss of rental and all the fixed costs that the unit would have been able to support had not have the fire. So that has been covered, and we also clearly have a cover for the building itself. All mutual, albeit with a little bit of delay, has been supportive to the extent of agreeing to a payout of 10 million Pula as an advance, while the nitty-gritties of these very complex claims are being discussed. Our team of experts that span from lawyers, claim consultants, and brokers consultants engineers and all of that have done a sterling job, and so has done, I would say, the Old Mutual ones, and we see no big issue in achieving a settlement. So in a nutshell, why it has been said, and clearly a little bit shocking, at least to me, this is a tremendous opportunity to reposition the asset for the foreseeable future, for the next 20 years at least. And we have the support of our guests who are calling us and telling us, we're happy to see that you're moving forward. We can't wait to go there. The strong insurance has clearly mitigated the risk for the shareholders and our financial metrics. And as mentioned, this is really an opportunity to rebuild from the strength that we had. So the soul of the property, our staff, and adding new offerings and a little bit modernizing, if you wish, our layout, so to appeal to the post-COVID leisure tourists and like. Thank you.
I think you're handing over to Uzoma.
Good morning. Thank you, Jacopo. I'll be taking on the ESG side of the presentation. My focus would be on the environmental aspect, while my colleagues Nawal and Lucy would handle the social and the governance aspect, and I'll try to be as brief as possible. From an ESG perspective, we all understand responsible investment and for driving long-term value for our shareholders and stakeholders. RDC's framework of ESG is underpinned by the UN 17 Sustainable Development practice. However, while we are thinking globally and acting locally based on the environment, Africa, Botswana, and Croatia. In South Africa, you would find that the South African National Energy Development Institute, which has been recently appointed as a Secretariat for Energy Transition Working Group, deals mainly with the energy performance certificate issuance, of Botswana to develop the national deep decarbonization pathways for the country, which is practically aimed at energy efficiency and implementing sustainable goals. Looking at all these, you would then find how all our actions towards sustainability implementation aligns with the key implementation strategies in the business environments we operate. Please, Abby, can you go to the next slide? Yeah. In having mentioned that, our commitment basically in the sustainability implementation revolves around actions such as waste segregation, recycling and reusage, water consumption monitoring, green certifications, energy performance, and carbon footprint reductions. It's important to actually mention some of the wins we've been able to achieve in the most recent and short term, such as transition and alternative energy generation in some of our properties, for which we have about 54% of our assets now being able to generate solar power. We've made significant progress in signing 18 PPAs for our properties, and which are at various stages of implementation. And with that, we are trying to obtain energy performance certification for some of our properties through SANEDI, and of which the Old Cape Quarter already has achieved a 4-star as-built rating status from the GBSA. These are things we pride ourselves as taking very good steps in the right direction. You would also notice that 17% of our assets are practically now certified. If you look at from like the hospital, it includes the hospitality and some of the office complex that we also currently have. Our Croatian property, in any case, has also undergone a test for energy efficiency during one of our funding requirements review, and thumbs up, it actually passed, which means that most of our properties are currently conforming to the standards that we want them to align with. And we are also working hard to see how we can start implementing some more effective decarbonization processes in the property, so that we can align ourselves with the modern trend in the near future. I think, having mentioned this, I would have to hand over to my colleague to deal with the social aspect of the ESG. I think that will be Nawal.
Yes, that's me. Good morning, everybody. My name is Nawal Bedford, and I will be representing the S, which is the social element of the ESG strategy. The approved CSI policy is in line with the group's strategy and contributes to its overall mission and vision. We believe that it is fundamental to improve the lives of the community, of those living in disadvantaged areas in the regions in which we serve and operate, and embrace the aim of adding value and changing the communities we serve. We have undertaken 15 of those different events. RDC's group's CSI initiative have translated into substantial donations and actions, demonstrating our unwavering dedication to creating a meaningful change. Through collaborations, contributions, and targeted efforts, we aim to enrich lives, nurture talents, and uplift communities. Our commitment to social responsibility is a cornerstone of our ethos. As we continue to inspire positive transformation partnered with various feeding schemes, and in Cape Town, we had various events such as the Cape Quarter, which honored the Mandela Day month. Thank you very much. That's me.
Thanks, Nawal. Generally, these 2 sections and 3 sections are actually carried out by and introduced by Gary. Unfortunately, Gary this morning could not be here, and because he had the graduation of his son. So those are values that are very important. And so he apologized, couldn't come. And I said, no, I'm sure we can find some of your colleagues that can chip in and work in the presentation. Thank you, Noel, for that. And I will leave it to Lucy now to take us through the governance side, the things that have happened this year.
Hello, my name is Lucy Kaplan, and I'm the Internal Company Secretary, and I'll be providing you with an update on RDC's governance structures and its leadership. In alignment with RDC's commitment to high standards of governance, changes were made to the board during the year. Excuse me, I'm not used to presenting. On the 23rd of May, Andrew Bradley was elected as the independent non-executive chairman, and Guido Gacchetti continues to oversee the group strategy and the performance of the asset management operations. This change prompted a revision to the composition of some committees and some of our policies and procedures. At a committee level, Andrew stepped down from the Audit and Risk Committee, but he remains a standing invitee, and he was appointed as chair of the Remuneration and Nomination Committee. In September, a revised board charter was approved, and within that document, it's important to highlight a new clause that was introduced, which requires the board to nominate an independent non-executive director to act as chairman in the event that the chairman is not available. And that's quite an important governance distinction that we wanted to bring to your attention. Two of our directors, Giorgio Giacchetti and Kate Mapache, have decided that they will not be representing themselves for re-election and they will therefore be retiring at the 2025 AGM. Excuse me, please. The board very gratefully acknowledges their significant contributions. They're two of the longest standing members of RDC's board, and they have significantly contributed to its success over the years. Subsequently, the board approved the appointment of two new directors with effect from May 2025, and those appointments are also subject to approval by linked unit holders at the AGM. And the addition of these new members will positively impact the board's metrics. If you look at the slide, excuse me. So RDC's board has 10 members, and with these changes, the number of independent non-executive directors increases to 60% from 50%, so that's a positive. And also the board will become 50% female as opposed to 40%. And also the tenure figures have been positively impacted. During November last year, a comprehensive assessment of the board and its committees and executive management took place, and the strong results confirmed that the board operates effectively, that it fosters productive deliberations and continues to enhance RDC's performance in the best interests of the unit holders. And that draws the governance section to a close. Thank you very much for listening.
Thank you, Lucy. Well done. I'd like now to leave it to the team, the finance team. Thank you very much.
Experts.
Good morning, everyone. Thank you, Lucy and Guido. A warm welcome to all in attendance today. By way of quick introduction, my name is Avishkar Singh, and I've had the privilege to be the Group Financial Controller of RDC Properties for the last 5 years. It is with great pleasure that I present to you the financial results for the year ended 31 December 2024. As key financial highlights, our investment portfolio remains the largest on the BSE property sector and has remained stable at 5.9 billion, despite the sale of some 140 million in non-core assets. This underscores the strength of our existing portfolio, which recorded fair value gains for the period of 108 million. Important to note that these fair value gains stem from external valuation, where the number of external valued properties was 66% of our portfolio. The strategic sales of non-core assets, as I mentioned earlier, coupled with strong inventory unit sales, enabled us to reduce our LTV from 43.29% in the prior year to 41.72% in the current year. This enhanced LTV position, along with our adherence to group loan covenants, has strengthened our relationship with our financial lenders. This represents a significant win for the group in the year. From a performance standpoint, our group delivered 11% increase in profit from operations, amounting to approximately 33 million pula, excluding fair value adjustments. This in turn has increased our earnings per share by 23% year on year. Important to note that the net asset value per share, which is a key metric to us, has also shown steady growth of 3.5% year on year. Finally, taking into account our final distribution declared, we are proud to announce an 18% increase in the distribution per share, reinforcing our commitment to positioning RDC Properties in the upper quartile of distribution yields within the BSE property sector. From an income statement point of view, I'm pleased to present to you the statement of comprehensive income for the year ended 31 December 2024. Key attributes to note: despite the property sales I've mentioned earlier, the group's revenue has increased by 2%, demonstrating the resilience of our existing portfolio. Demand for our inventory units in Cape Town remains strong, with 17 units being sold at market-reflective prices, generating approximately 57 million pula in sales revenue. A key milestone was achieved with the successful disposal of 108 Albert Road, a joint venture project developed for sale at an opportune time. The transaction yielded a profit of 5.9 million pula in terms of IFRS 10 loss of control. So you'll see that in the income statement. Towards the right of this slide, a positive trend is shown with a consistent growth in our profit from operations. This reflects our strategic focus on maintaining a relevant and value-driven investment portfolio. Our interest rate derivatives, whilst on the income statement, you do see a mark-to-market devaluation of 18 million pula. These instruments are approaching maturity, however, have contributed to the group by reducing finance costs for the period by 14.8 million. We'll continue to actively manage our hedging strategy as we anticipate interest rate benefits in the new year with the downward trend in interest rates. From a financial position point of view, the balance sheet, as I've mentioned earlier, our core investment portfolio remains strong and stable at 5.9 billion as at 31 December 2024. Looking ahead, we can expect improved finance costs in 2025, which is supported by two aspects. One, the lower LTV, as I mentioned earlier, which is on track to our medium-term goal of having a 40% LTV. And couple this with the reduction in our cost of debt, which has gone from 9.13% for the group in the prior year to 8.54% in the current year. We do expect this to further decrease over the course of the year, as many of the interest rate decreases in South Africa tend to have happened towards the end of last year, with the full impact now, or full benefit being now realized in the new year. I would also like to highlight the strength of our portfolio, which is underscored by the 15% increase in cash generated from operations, which stood at 365 million for the year ended 2024. That would be shown on the cash flow statement. From a financial risk management perspective, financial risk management strategies always remain at the forefront of RDC's asset management policy. Interest rate trends across all jurisdictions in which we operate in have started to decline, and we expect this to positively impact our income statement in the new year. A strategic win for the group was the successful raising of lower-cost debt in Croatia, allowing us to settle higher-cost debt in South Africa. This rebalancing exercise has significantly contributed to reducing our overall cost of debt and strengthening our portfolio against macroeconomic risks. As a summary, as at 31 December, our debt profile consists of 30% fixed-rate instruments, 10% hedged instruments, and 60% variable-rate instruments, which are well poised to benefit from the declining interest rate environment. On the exchange rate side of things, the group continues to operate with a natural hedge in countries where we have presence. The aforementioned debt rebalancing of Croatia that we've done was executed at the optimal time, aligning with interest rate declines in Europe and a stable ZAR-Euro exchange rate in mid-2024 when we've done that exercise. Thank you for the opportunity to present the financial results for the year. I look forward to your questions and comments. I will now hand over to Jacopo, who will take you through the group's portfolio analysis.
Well done. Thank you.
Thank you very much. So on the next slide, This is showing the movements. As Avi was saying, our result has been positive despite the sales of our properties, and you would see that we continue to be diversified. Again, as I mentioned before in the opening remarks, is about managing the various risks in the various jurisdictions and taking advantage of the various opportunity. You will see that there's not been a tremendous change, but to note that on the next slide, that we have moved and rebalanced a little bit our exposure to the office side, which has been reduced. The office has been problematic, especially in certain areas, which are now changing. The Gauteng area is not as it was in 2020, 2022 at all, and we are seeing strong sign. And actually, you have seen it from you will see it from the decrease in vacancies and the revenue, which have underpinned the overall result of the group. Our hospitality sector has performed very well during the year, is again becoming predictable, and it's not only a great revenue generator, but also underpins the valuation of the relevant properties. So we will continue into our effort in diversifying by region and by sectorial, try to take in advantage of the sectors that are poised for a beat in the market in terms of growth. And clearly we have identified, as mentioned, hospitality as one of them. We can move to the next slide where we can have a visual vacancy outlook. So when we took over, vacancy were around 14%, and 3 years down the line and through a difficult period, 2022 wasn't an easy year. You will remember we are now sitting around 8.2%. And Cape Town, it's very, very low. It's below the 5% mark. Gauteng, which only represents 18% by the GLA, has shown a significant decrease, and the outlook for the year is positive. It's business as usual. It depends on us. It's not the market that dictates anymore the conditions. So we're very happy with the outlook. Durban, as we have anticipated all along the last year, has now gone significantly down, and through our presence there, I think that matters can even improve. Croatia is clearly at zero, has been at zero, and will be at zero for a long period of time. We have had leases, as mentioned, till mid-2028, till August 2028, and the other property of ours are unique and with very long-term leases, and these kind of assets are actually in demand. When Uzoma was talking about the energy performance certificates, these are directly linked to the cost of your facilities. And in Croatia, being the EU, the EPC certificates are really an integral part of any leasing lending terms. And not only we have scored very well, but we scored so well that we are not requested to set aside any bucket of money to improve the property to achieve a certain EPC grade, because we are already there. Overall, we have declined from 11.3 to 8.2, and this is not only a trajectory, but it's a consolidated trend. And as we speak, we do not see any real risk for this flattening or not continuing in the same direction. Moving to the next slide. No, sorry. All right, yes. Yeah, this is on the portfolio optimization. Thank you very much. As mentioned, it's not only about selling, right? Selling properties as of non-core assets, it's like rotating to intercept better opportunities. In this moment, the best opportunity for all was to reduce our debt under last year severe interest costs. This is happening, but we are redeploying. We're here for good. We are here for building a company which has long prospects, and a stable outcome, giving also the kind of shareholding that we have in our listed vehicle in Botswana. So we have completed the Westlake Shopping Center, and it's now operating, and is operating well. We're getting very positive feedbacks, these directly and also indirectly through the various tools for instance, our food offering. The long term with TELUS, which is a Canadian company but listed on the New York Stock Exchange. It's a call center, let's call it that way. It's an industry that is booming, and South Africans are particularly good at this kind of service. And this property is now being secured. TELUS has really injected an inordinate amount of money, around the 10 million mark USD, into preparing their premises. So basically, we are very confident that they're going to be our partner in business for a very long period of time, and we will nurture this partnership also to see if we can help them out on their needs in other properties of ours. We continue to identify new projects, and especially in the areas where we believe that growth it's super strong now, but we are not disregarding the Gauteng area, which has really clearly hit the rock bottom. And by signs that you can get by visiting the city, you see that it's on an, albeit slow, on an upward trajectory. So this is the point. We have had, as mentioned by Avi before, we have sold a number of property close to the 200 million mark in cash generated. We have anticipated sales. Sales are going through competition authorities and all of that. So, but both the Sparrow and the Regent are very close. It's only a couple of months to go to be paid for and transferred and paid for. And this is also a very good sign. And we're happy about these two sales. On the next slide. These are what we're looking going forward. The senior living, the change in leadership has called us for having a prudent approach. So Let's Ramokate, our country manager, is now engaging directly with the various authorities and ministry to double check that rules and regulations are the same, to present the project and to gain some buy-in from the authorities prior to going back to prospective customers and partners into the project. Our relationship with Total Care is thriving, and they are now setting aside a dedicated team in order to bring this project to a bankable moment so that we can get to finance close. The hospitality investment opportunities, we really do believe in hospitality, and it has been underpinning our growth, and we believe that it is far from being overtraded, but far from being overtraded. Having Chove Marina Lodge from next year up and running and better than ever, David Livingstone Safari Lodge renewed through the PIP, Maza Square Hotel also renewed through the PIP, and the Radisson Rand, which is gaining a lot of traction from an occupancy point of view, will allow us to create circuits. So we are exploring the Okavango, which goes without presentation, arguably the best place for African lovers for game viewing on the planet, and the Madikwe, which is a different kind of market, but is a great market for first-timers to Africa. It's malaria-free, it's renowned, it's secure, and you have great game viewing. And it's very close to Gaborone. It takes very little time, for instance, from our Maza Square Hotel to get into the lodge directly. We're talking about an hour of time, and this is even less than what you get from Johannesburg. So basically what I'm trying to say, we are creating synergies, we are creating circuits which can be easily managed and by the existing units that we have. We have mentioned the various solar initiatives that are not just corollary to our ESG, are also adding value to us directly and to our tenants as the ESG is taking traction across all the industries and is becoming now mainstream. The greenwashing period is far behind our back. Now is to be solid, start really measuring, and we are delivering. The 18 signed power purchase agreement are on a rollout phase. And we are getting the first results, and it's very nice to see that our partner, very solid partner established in South Africa, was very true in his forecasts. And given the structure of the deal, we are achieving plus or minus the amount of energy that we wanted to achieve through solar, but we are even beating our expectations on the savings, given the constant upward trajectory of energy prices in South Africa. And on the corporate action update, I'm sure you will have further details during the Q&A session. Our circular that was meant to reach the shareholders to eventually present what we had in mind was stopped and put on hold on the 20th of September. And we have experienced a number of regulatory delays. And the current date to receive a communication is the 25th of April. And clearly, based on the outcome, we shall advise our unit holders accordingly. Thank you.
Thanks, Jacopo and the whole team. Give me pleasure to just wrap up the presentation. I didn't want to sort of mention everything before the presentation. As you would have seen, we're working on a long-term strategy, working hard. There's been a few changes in the structure. I think this is in a way very positive because it increases the depth of management and to take care of the whole portfolios. Jacopo has been nominated as CEO of RDC and of the group, and he has a number of departments reporting to him: CEO's asset management, CEO property management, finance, development, and the ESG component. So Jacopo has now got a much deeper structure, and this structure reports to the different committees, which are the investment committee, the ARC committee, the ESG committee, and the remuneration committee is reported essentially by me. I guess among the things that are really key to all of us is the earnings growth, 23%, the dividend up 18%. I'm sure that will sort of appease those shareholders that were saying, well, your dividend is not increasing, what are you doing? And the trajectory is to continue the growth of the dividend as we still balance growth and value of dividend distribution. Hopefully this will slowly reflect in the share price too. The revenue by currency, we went from 20 to 23, so of hard currency, and that is in line with our strategy. I'd like to indicate other few wins. We are happy to report that the sales of those properties that we've been selling, the non-strategic assets that we are selling, are actually all well above what we acquired them for in the first place, well above, and in fact in line with our book values, if not more. Take the example of the Regent, which was in our books, I think, at 125 million rand, and was sold for 150 million. So we are definitely maximizing the value of our portfolio. I'd like to thank the management team for all this hard work, and looking forward to some new initiative this year. We talked about the acquisitions of in the leisure market. They are not yet in the bag, so we will report to them when they are in the bag. And in terms of the prime time corporate action, I guess we are waiting with trepidation this legal review that has been done. It's been fairly stressful. There's been a lot of questions, but we feel very comfortable that we have always done things in line with what we should have done, and we are looking forward to the report so that we can then re-engage with our shareholders, and then finally, hopefully, go to the shareholders of Prime Time, indicating our project. This falls exactly in line with our strategy, because it would increase the NAV per shares, and it would allow us, through a strategy that we have, to reduce the loan to value to way below 40% by some disposals of portfolio that we intend to do, both on our portfolio and the other. As we've always said, scale is of essence. To asset manage properly, the larger the portfolio, the better, the more diversified it is, and therefore it is very important for us to grow through some acquisitions, as small developments and small acquisitions will not bring us to the growth we're looking for and we're aspiring to. So this concludes my few words, thanking all the management for their support, and clearly our board. Thanks, Andrew. I leave it to you.
Thanks very much, Guido, and the rest of the management team for that. I apologize. I was remiss up front to let you know if you had any questions to raise your hand and introduce yourself, but I did put it on the group chat. So to open up any questions now, I see Mr. Coyne, you did raise a question in that chat, but from my perspective, I think Guido has addressed what you requested. Are you satisfied with his answer, or would you like anything further? So if anyone wants to ask a question, please do just raise your hand virtually, and then introduce yourself and the organization that you represent. Mr. Coyne, over to you.
Andrew, thanks so much. Yes, everything has been answered. I didn't realize that it was so late, 25th of April. I thought it was going to be next week. So we've been waiting patiently. In 5 months, we've been waiting. I can't believe it. But anyway, thank you so much for that update.
It was originally going to be the 14th, and then for various reasons, they requested some additional time. So it's now been pushed out to the 25th.
Okay, thank you so much. I must apologize now. Sorry to interrupt, but I must leave the meeting. So thank you so much for this presentation. I've really enjoyed it, and good luck to everybody.
Thank you, Mr. Coyne.
Right. Bye-bye.
Any other questions from anyone else? Please do raise your hands. I'm not seeing any questions.
Yes, there is a question from Kennedy. Kennedy, please unmute yourself.
Thanks, Kennedy.
All right, thank you very much. Yes, I am Kennedy from Vunani Fund Managers. I have two questions there. I just wanted to understand what's the firm's targets around return to shareholders, either it be your target return on capital employed or return on invested capital, such matrices. What's the target that the firm has? That's one question. And secondly, what's the maximum cap, pay or covenant in terms of LTV, if you look at your loan contracts? Thank you.
Thank you, Kennedy. Jacopo, are you going to deal with that? Or yourself?
Yes.
And Yeah, thank you.
And with Guido, I will take the second one. We have been visiting you, Vunani, and most of the fund managers on behalf of the shareholders for the usual presentation, and we have noticed the fact that really reducing the loan to value is a must happen. So we have said that 40% would be our max. It takes time to get there, and I think without promising that we should be very close to that at the end of the next reporting period. So we would be moving from 40% to 30%. And clearly, there could be instances whereby we will increase our loan to value temporarily, just as we did for the acquisition of Tower, depending on the opportunity. It's never the metric itself of the prior period of the outlook on the next period. Is the overall trajectory that the company is within that really matters. In terms of our approach, I think that the support that we're getting from our lenders, the main lenders, it's proof that they're very comfortable with that. Whenever we sell a property, it happens that we need to return some money, and some of our lenders are saying, no, we're comfortable with these levels. You can use this money, you can keep it technically in a credit revolving facility so that you can utilize that one for your growth plans. In terms of metrics for return on investments and return on equity, we are, I wouldn't disclose that so much in details. We can have it as our usual follow-up meetings when we come and see you. Our target is to increase the distribution, and that by increasing the distribution, everything will come along with that. So this year we have grown 18%. And we want to get into the upper quartile of the distribution of our peers, basically the real estate counters on the market. So that is our view. I hope that this gives you a little bit of comfort.
Maybe I will add. Sorry, can I add to that? Avi, I will leave it to you, but just as a principle, I just would like to mention that among the 4 objectives is to increase NAV to 3%, between 3 and 5% above the CPI. So that is one of the metrics that we measure ourselves. And clearly that metrics is important because the NAV is with 66% of the assets valued independently gives you the value of the portfolio. So the growth of the portfolio is an important matrix, and from a return on invested capital, we are working towards a return or a total return with the share price and the dividend distribution that needs to be above the inflation. And again, with the 3 to 5% above inflation. That's what we are trying to achieve. Anything else on your side, Avi, that you wanted to mention?
That was exactly that. Thank you, Guido. Just to answer the first question, I think Kennedy wanted to know what the other banks' LTV requirements are that we have in terms of covenants, and that's 50 and 55 in the group. So it ranges between 50 and 55.
Thanks, Avi. Kennedy, does that answer your questions?
All right. Okay. No, thank you. Thank you very much. Yes, I think that addresses my questions.
Thank you very much. Godfrey has put a question on the chat. How long do you expect your disposal strategy to last, and how much ideally would you want to raise from the remaining sale of the properties? I think that question, that's Godfrey from Corey Capital. And then you've got Ndubim Mudise, who said, note that your strategy is under review, but notwithstanding that, you have a target portfolio mix by region and segment. So if we could answer those 2 questions together.
Yeah, thank you very much. I can tackle Godfrey first. The disposal strategy, it was accelerated given the fact that it was in a regional plan after the takeover of Tower. But this is a constant exercise of rotating your assets. So some assets reach their maturity, and it's about time, because you really at the apex, and it's the right time where we deem it's the right time to sell. We might have these disposal, and then immediately redeploy into that if it's necessary, depending on the level of the loan to value, or into other yield enhancing or growth enhancing assets. So this is how we work. This year, we have a stock of residential units in Cape Town, and given the fact that Cape Town is really booming, and especially on lock and go and exclusive residential, we are targeting to complete the sale of these units, which were originally meant for being sold. So that is just a part of the strategy. We have grown it, and now they are ripe. And early indication is that our plan to dispose of I think 19 are left is doing well, because in the first couple of months of the year we have already sold three of these units. So we are very much on track.
Maybe to you, Jacopo, on that sales. When we acquired the Tower portfolio, those apartments, if I'm not mistaken, were at the time for sale at roughly 45,000 rand per square meter. We stopped the sales and we set the price at 65,000 per square meter, and we're selling and we've sold. So we had 55 at the time, and we are slowly selling them, and we can see that the price at 66,000 is what we're achieving. So this is exactly when we say we need to be patient, but those sales happen at the price we want.
Correct. Yeah. Thank you very much for that. It's exactly that. Sometimes you really need to strike the balance between waiting a little bit. That is why I believe that, for instance, in Gauteng, some property values are excessively depressed for reasons that are now fading away. And there could be, growth that will exceed the CPI simply because they're starting from a very low base. So we are looking at it holistically with no prejudice. So this allows me also to answer a little bit on Lume. If you have a target portfolio mix by region and segment, we have broad targets on this one. We're not specialized fund. We not do one single sector in one single region. Clearly, we have a strong presence on in the Cape Town area, and the like. So we like our goals. So, for instance, were we to get an opportunity in Croatia, was it to be an acquisition of a distressed asset with a component of redevelopment and for holding for future growth, that would be clearly sitting high in our radar. In Croatia, you have to work stringently under ESG. The E component, as I mentioned, for the lending is important. So yeah, were we to have that kind of opportunity, we would do that. And we will continue in time into rotating from sectors that are not performing. You've seen the rotation from office a little more into residential, but without really a fixed cast in stone portfolio mix. It's more about the uniqueness of the property, the kind of tenant that you can get, the kind of lease structure that you can have, so that you enhance the metrics of the broader goals that we have mentioned.
Thanks, Jacopo. I think that's obviously with the overlay of us having that target of 40 to 50% in hard currency.
Correct. Thank you very much. And I want to explain that the hard currency, just to stress it again, is not only derived directly from Croatia, because you said, okay, Croatia, it's euro, and then you check our pie charts. The reality is that hospitality, and especially on the upper end of the leisure, is denominated in USD. Our David Livingstone Safari Lodge is completely denominated in USD. So you derive hard currency, not only by geography, but the kind of assets that you hold in any of your jurisdictions. Thank you very much, Andrew.
Thanks, Jacopo, for clarifying that further. Any other questions? I'm not seeing any hands raised, and I'm not seeing anything further on the chat. Guido or Jacopo, Abi, any final closing comments?
Yeah, thank you. But just to say from my side, before Guido concludes, maybe, is that soon we will come and engage one-on-one with analysts so that they have an opportunity, as they always have, to fire their questions, so that when we come for the meeting, we're going to be prepared and we can table and have constructive discussion as usual.
Thanks, Jacopo. Final word, Guido?
No, I think thank you very much, Andrew, and I know it's the 31st of March. This was the limit to our audited accounts presentation, and we thank you everybody for accommodating the change from the 26th to the 29th. A lot of the senior members of the fraternity of investors were actually in Cape Town during the 26th. And 25th for a conference on loans and bonds, and added to some administrative decisions, we decided to move the meeting to the 31st. So we thank you all for accommodating that.
Okay, wonderful. Thanks again, everyone, for your attendance and participation. It's wonderful to see you all. Take care, everyone, and I'll now bring the meeting to a close. Thank you very much.
Thank
you.
Thank you.
Thank you.
Thank you.